Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mate.
Welcome to another episode of Equity Mates. Our aim is to help you on your investing journey, break down the barriers from beginning to dividend. Whether you're an absolute beginner or Warren Buffett, we guarantee Equity Mates will have something for you. My name is Bryce, and as always, I am joined by my equity mate, Ren. How's it going?
I'm very good, Bryce. Now, look, I don't want to start. I don't want to start this episode off on a negative note.
Then don't.
But I'm still just not completely sold on the intro.
I don't think I'm going to change it.
I think it just. I think there just might be a missing word or two.
All right. Well,
Yeah.
I'm not going to do much about that.
Honestly, it throws me every time.
That's fine.
I lack gusto on my intro because of it.
Look, you'll get used to it. It's New Year, second episode in, third episode in now, and we're going to be moving away from bold predictions for this one and revisiting and kicking off the Equity Mates community hypothetical portfolio that has been ticking away, and we have big plans for that this year. So this episode, we're going to revisit how it's been performing, few key sort of call-outs, and then the second half of the episode, we'll be having one of our community members from Equity Mates come and pitch a stock, which we're super excited about.
Yeah, can't wait. Now, before we get into it, whenever we do these episodes, we've just always got to say that nothing in these episodes specifically, but across Equity Mates more generally, is in investing advice. The reason we do these portfolio episodes is just so we can try and learn by doing. So many of the experts we speak to talk about, actually getting in there, looking at individual stocks is the best way to learn. And so this is our way of doing that with the Equity Mates community. But obviously, nothing is buy, hold, or sell advice. We cannot be clear about that. Do your own research. Don't get investing tips from a podcast.
There's going to be no better example of learning on the job than the interview this Thursday with Emma Fisher, which fantastic
so
to
good.
kick off the year. Yeah. But so stick around for that. Ren, before we get stuck into it, you mentioned last week that we have our support function for Equity Mates now available on the website.
Yes.
You've hard-coded in yourself along with a number of other things.
I like this running joke that I'm doing all the coding. I've got a new website coming about halfway through the year that is going to be very, very nice. So let's keep that joke going. But yeah, I think... obviously we've been doing Equity Mates for 4 years now, and we hope to this point it's all been advertiser supported. And if you feel like you've gotten value out of Equity Mates and you have the means to support us, we'd love your help. The more time I can spend not talking to advertisers, the better.
You don't talk to them anyway.
No. But yeah, look, obviously the content will remain free. This is just if you think that what we're doing is valuable and you want to help us grow Equity Mates, your support would be greatly appreciated. But that's enough of us going hat in hand.
Yep. A big thank you to those who have already supported us and who have signed up already. So very much appreciate your support. You can go to equitymates.com/support. All the information is on that page. So let's crack into it, Ren. The portfolio for 2021. So just a reminder, if you have just joined the show, Alec and I are building out a portfolio from, chatting to the community and chatting to the experts and using our experience and learning. And we have set up a core portfolio and a satellite portfolio just to revisit both those concepts. Core portfolio being a portfolio made up entirely of exchange-traded funds, ETFs, that we are going to be depositing or buying on a consistent basis every month, $1,000 or $2,000 each month into that. So not a lot really going on there. The fun is happening in the satellite portfolio, which is a portfolio of individual stocks that we're going to have a bit of fun playing around and pitching ideas and having committee meetings and whatnot.
I think core portfolios can be fun.
Core portfolios can be fun. Yes. Poor portfolios.
I think the core portfolio is it takes less brain power, really.
Yeah.
All we're doing is the philosophy there is things that you would just buy and hold and add to and never really think about. It's just take the market average returns over a long period of time and you can do very well for yourself.
Yeah.
So there's really not like if we did a full episode on a core portfolio, it'd be kind of boring.
Yes. Well, I think we did do a full episode, but anyway. So we have a couple of grand to put into it, coming off.
Should we explain? Should we explain that if people are new to the show, how the couple of grand idea?
Sure.
Do you want me to do it?
Yeah.
So basically, most everyday investors, most people in their Equity Mates community aren't going out and raising $15 million funds and having all the money to invest on day one. The majority of investors out there work a 9-to-5 job, save a little bit of money every paycheck, and then have a bit of money to deploy into the market. And, that's the same as Bryce and I. So that's what we're doing with this core and satellite portfolio where every month we're saving, $1,000?
Yep.
And then we can put that into the market.
So that's what we have. Last time we've revisited this, we put some cash into the Australian property and international property ETFs. We're just going to work down the list. So this time we're going into global infrastructure and some gold.
Sounds good. And if you guys want to play along at home, equitymates.com/portfolio. The web page that has to this point beaten my coding skills.
Yeah. There's no information on that website.
Are we going to commit to have it up by the time this episode goes live?
No.
Go to it and see. Maybe we've got it up. We'll give it a valiant effort to get it up. Honestly, if anyone from WordPress or the WordPress developer community is listening, stock market plugins suck. So if anyone wants to develop a good one, give us a yell.
So, Ren, let's have a look at the core portfolio. It is currently up 11.8% from when we started this in late July last year. We've currently got $19,000 we've invested, and it has a market value of $21,700, giving us a gain of $2,300. Not going to complain with that, but it is doing what it is supposed to be doing and just ticking along nicely.
Yeah, I mean, 11% in half a year is good, but the last 6 months have been very good for the market. And, we've got in that core portfolio, we've got a bit of US, bit of Europe, bit of Asia, a bit of Australia. And it's been a good time in the market. I wouldn't expect 11% every 6 months for the next 40 years.
No.
If we did, I wouldn't be complaining.
The star performer at the moment is our Asia ETF. The ticker is VAE. It's the Vanguard Asian ex-Japan ETF. It's delivered a 21% return.
Not bad.
It's kicking along.
Yeah.
So as I said, we'll try to get all of this online. No guarantees. But let's move to the satellite, Ren, because that's where a bit more activity is happening.
Yes.
As a reminder to everyone, we had a few Equity Mates members come and pitch last year. Alec and I did a few pitches, and then we also threw a bunch of stocks in late last year, including Bitcoin.
The controversial throw a few in at once. And then don't forget that you actually also snuck one in without telling me.
Snuck one in, and we'll get to that in a second. But so some key points to discuss. Citadel.
Yes, pitched by an Equity Mates community member, then got a big takeover offer, and the stock jumped, 30%?
30 or 40%. Yeah.
So sometimes it's better to be lucky than good.
Yes.
But that company has been acquired, no longer listed on the ASX. We bought it at $4.39, and the acquisition price was $5.70 a share. So we did all right on that. We made a few $100.
Yep, 28%. I guess the key thing here, though, is that's now actually going to become cash for us.
Yes, that's what happens.
That's what happens. Yeah, it's no longer listed. So the market value when it did get acquired was $1,200 thereabouts. So we're going to be moving that into our cash position and be able to deploy that whenever we feel fit. So that's that. What else has been happening, Ren? We have my sneak in stock. So I recall talking about Palantir and you weren't too keen on sliding it in, but I did it
No,
anyway.
no.
I've snuck Palantir in at the last at the 11th hour on the 13th of November.
Like Bryce sliding into people's DMs, he slid this stock
That
into our portfolio.
That doesn't happen. That doesn't happen. Purchased it on the 13th of November, shortly after it IPO'd, and much to Ren's reluctance, bought it at $15.80. And it is with great joy that I can report it is currently trading at $47. So that is a return of 101%.
It's trading at 31.76, isn't it?
Oh, sorry, my bad. I'm looking at how many shares we have. It is trading at 31.76, which is still a gain of 101%.
Yeah, so it's doubled.
So it has doubled in value. So
Look,
I'll take it.
Yeah, I'll admit when I'm wrong. This is a learning experience where we're not here to tell people that we're experts.
Nope.
And for me, that's a learning experience. I mean, look, I remain skeptical about the company. Obviously, as a share, it's done incredibly well and the market loves it. But yeah, anyway, let's not go down the Palantir rabbit hole again. But yeah, well done.
Thank you.
Yeah.
Kudos to you as well. Really enjoyed the New York's Time pitch of yours, and it is up 31%. So it's ticking along nicely as your pitch would suggest. Otherwise, a couple of the ones that are dragging us down, we have Sydney Airport down 11%.
We pulled the trigger too early on the vaccine
so.
stocks. That was part of our just throw a whole bunch of stuff in there at once.
Yeah. But look, overall, our portfolio has performed reasonably well. We're up 19% after, again, kicking this off in late July last year. We've made about $3,000 and a bit.
So two other stocks, two other things we have invested in that I want to discuss.
Yes.
First of all, my stock of the year, Tencent.
Yes.
We put that in. It's up 28%.
Yeah, really kicking goals.
Yeah. Unfortunately, that doesn't count for my stock of the year because obviously a lot of that happened in 2020. But what a company!
What a company!
But the one that I want to talk about is an asset that you are particularly fond of.
Yeah.
Bitcoin.
Yeah.
Our best performing asset.
Performing. Best performing asset. Yeah. Look, not surprising there. Glad we also snuck that one in. Purchased it at around 22,000, and at the time of recording, it's sitting at around 49,000. That's AUD.
I was going to say.
Yeah, AUD. But look, I'm going to keep that one in there if you're happy to keep that one in there as well, just to sort of see how it goes. But it is the best performing asset year to date. So, let's just see how it goes.
Yeah, I mean, look, there's nothing that I would really want to sell. Maybe Palantir.
No.
Maybe if you did a sneaky buy of Palantir, maybe I'll do a sneaky sell and not tell you.
Sure.
No, but look, I think this the point of this for 2021 is to really make these portfolio episodes, a chance for the Equity Mates community to come on and to share what they're looking at. So I think as we go through the year, less and less we want to do Bryce and I looking at a spreadsheet and talking about random stocks that may not be super easy to follow if people aren't following along at home. And they can't follow along at home if our website is busted. But we want to just use this as an opportunity to hear what stocks you guys are looking at, to, if you want to pitch an ETF, if you think we should be selling something, we want this to be a two-way conversation. So to kick that off, unless you've got anything further to add.
No.
We actually have Dan from the Equity Mates community who's going to pitch a stock.
Yep.
But before that, we'll quickly hear from our sponsors.
So, Ren, super excited for the second half of this episode, as we have been, we left off last year and have started this year by saying that we're going to get a lot more of our Equity Mates community involved in the episodes, particularly these portfolio episodes.
That's just because you don't want to give any stock pitches.
That is not true. However, we are excited to have our first stock pitch from one of our community members, Daniel Ortizie, who is on the line with us at the moment. Daniel, welcome to the show.
Thanks, guys, for having me on. Excited to have a chat.
Daniel is actually one of the guys who helped us with the research for the summer series. So
yeah.
a big shout out to you. You're obviously passionate about equities. But what have you got for us installed today?
Yeah, so a company I'd like to talk about today is Adriatic Metals with the ticker code ADT listed on the ASX.
Nice. Okay. I personally haven't looked too much into this, so this is going to be fun for me. Ren, have you?
No. I mean, we knew what Daniel was going
Of
to
course.
pitch before, but not before Daniel told us what he wanted to talk about. So, Dan, why don't we start at the beginning? Tell us a little bit about the company and what it does.
Sure. So Adriatic Metals is both a precious and base metal developer that owns a world-class Vareš project in Bosnia and Herzegovina, and also they recently acquired the historic Raska deposit, which is located in neighbouring Serbia. To provide some background context regarding the industry, mining projects undergo quite a long-winded cycle, ranging from exploration to discovery, and then development, construction of the project, and finally production and rehabilitation. From an investor's view, production is where the real financial value can be obtained, because that is a point in the life cycle whereby the company is generating both revenue and profits from their saleable product. Typically, this process could take anywhere from 8 to 10 years to take a project from exploration to production. And in the case of Adriatic, this process has been quite streamlined, which is aimed to be completed in approximately 4 to 5 years, with production forecasted to begin the fourth quarter of 2022.
So let's just take a step back there, Dan. So for people who are unfamiliar with some of those terms, when we're talking about mining explorers, they're literally companies that have a patch of land or have mining rights over a patch of land and are literally exploring it to see if there's minerals there.
Yeah.
And then producers are when, they've confirmed that there's minerals in the ground and they're actually doing the mining operations to extract that mineral. Is that a fair summary?
Yes, exactly. An exploration company is focused with discovering a resource underground, and a production company is focused with extracting that resource as a saleable product.
And so Adriatic that we're talking about here is in the explorer stage. So I guess the question is, why do you like them? I assume it's because you've gone over to Bosnia and looked at the ground that they're exploring and you've found some gold or something there?
Look, with the current COVID restrictions, I haven't been able to yet, but hopefully when they lift, I'll get in the first class flight to Bosnia, we'll see. So sure, yeah, the assets I'd like to talk about, mainly the Vareš project, which is really the crown jewel of Adriatic. The Vareš project consists of two separate deposits, one named Vijavača and the other named Rupica. And this project consists of a very high-grade resource containing about 213 million ounces of silver equivalent, grading at 342 grams per tonne. Some numbers that I could help kind of explain the project, which are released in the pre-feasibility study. It really emphasises the world-class nature of this project. So it has a net present value with a discount rate of 8% of around 1.04 billion US or 1.36 billion Australian, with an internal rate of return at 113% and an initial capex requirement of only 173 million US.
So that's interesting. So the net present value of the mine is over $1 billion US, or of the the minerals in the ground is over $1 billion US. Yet the company's $500,000 market cap. Is that right?
So basically, a project, a generator or an explorer, they have to be valued at a discount to NPV because, of course, there are costs involved with developing the project, and also there is a risk factor with the execution of the project. So not all projects that enter a feasibility stage become a mine, and therefore a discount is applied. Typically in this sector, you can see a discount of around 0.7 times NPV for a really high-class project. And in the case of Adriatic, it's currently trading at about 0.4 times NPV. So you can see there is a clear upside to be retrieved here once the project becomes more de-risked.
So if it's trading at 0.4 times NPV, does that mean the market's assuming there's a 40% chance of this project going ahead?
Yeah, sure. In essence, you could say that. But also it's important to consider that the project is modelled off, quite a few assumptions. Of course, changes in commodity price will be very sensitive to the net present value, and also changes into the resource and also the reserve will be significant changes in the case of Adriatic.
So this is a pretty basic question, I guess, but in terms of the process of this, explorers find the mining site or where all the deposits are. Do they then value it based on what they know and then sell that mining site to the producer? Is that how the flow works?
So typically it could either be that the explorer will, develop this project and raise money and create an investment decision and take it on themselves.
Yep.
And all of the work, the construction work, the mining operation, that's generally contracted. And the other kind of avenue that companies go is that they enact an M&A activity. So they can either sell the project off to another company or create like a joint venture structure and etc. In the case of Adriatic, that decision hasn't yet been made in terms of financing. The financing decision is probably going to be announced around April this year. So this is a project that's quite far along the curve in terms of development and is really close to being produced as a mine.
So, Dan, it's an interesting company. Obviously, you're talking about a 60% discount to the net present value if it can go ahead. But I assume there's a lot of mining explorers out there on the ASX and around the world. Australia loves a mining explorer. Why do you like Adriatic over some of the other explorers out there?
Sure. So globally, I believe there are over 3,000 listed junior miner companies that are exploring and developing projects. And realistically, much less than 1% of those companies will end up with a developed mine. So you have to be very cautious in kind of researching and picking in these companies carefully if you're going to go in this space. Adriatic is, it's a very unique position. They entered into Bosnia and they are one of the first companies to do so, in the last 20 years. They have quite a significant first mover advantage. And they also had very large source of information when they acquired the project. And that's how they've kind of explored it so efficiently and taken the project to such an advanced stage so quickly. And also from the economic side of the project, there was a study that was undergone by Edison Investment Research. And that study showed that an average NPV of projects around the world was about US $433 million. Of course, you can see that Adriatic quite has a superior project with an NPV over $1 billion. And also the internal rate of return, the profitability index, 113% IRR. It's a very profitable project, very desirable.
Mm. So, Dan, I'm interested not so much about the stock, but your process to actually find this stock. You seem to be reasonably knowledgeable about the mining space. It feels like that's somewhat your circle of competence. How did you find Adriatic and perhaps help the Equity Mates community understand a bit about your sort of research process?
Yeah, sure. So in the junior mining space, there's typically 4 pillars that we like to kind of contend when we're researching a company. And that's number 1, the asset, the management team, financing, and also kind of the promotion of the company. Because these companies do not make any revenue, in order for them to raise money at an attractive price, there needs to be, promotion and also some exciting results and work. So when you're kind of shifting through these companies, you always have to keep those 4 things in mind. In the case of Adriatic, they have quite a developed management team that is led by Paul Cronin, the CEO, who's had, over 2 decades experience both in corporate finance and investment banking with a focus in Eastern European mining. So quite a developed management team, also quite a developed geology team that has gone into discovering this resource. And now they're really in a really good position to get this resource either into a mine themselves or sell it.
So, Dan, we normally would wrap up with a question around like financials and valuation, but I feel like we've already touched on it. The net present value is given to us, and really the question then becomes around, the risk of this project not going ahead and that value not being realized. I guess rather than that, I want to ask a question around timing.
Sure.
So I feel like a company in this position, the key point is, when they can raise that money and they make the decision to actually exploit the mine themselves, or they decide to sell the mining rights to another company. How do you think about investing in a company around the timing? Are you gonna just buy and hold, or are you gonna try and wait until there's that catalyst and buy at that time?
Yeah, so really as an investor, you have to focus on the fundamentals of the company. In the case of Adriatic, right before this financing stage, Paul Cronin came out in an interview and said that they've had over 70 financiers approach them interested in developing the project. So there's quite a high level of confidence that they're going to be able to, number one, make an investment decision. And in terms of the future and, whether I make a decision to keep the stock or sell it once they announce a financing, Adriatic really have that first mover advantage, number one, in Bosnia. And number two, they have an established pipeline of projects. The project they acquired in Serbia certainly has the potential to be a mine as well. And that could be brought into production as early as 2 years after the Vares project. So what I see here from a company perspective is that they have an established pipeline of very profitable projects. They're still trading at what I believe to be a significant discount to what they're worth. And for me, I would consider this a hold, number one, because the underlying commodity prices have all been performing strongly, specifically silver and lead and zinc. And also number two, that I still believe there is a large M&A prospect within this stock.
Nice one.
Nice. Well, I mean, given the silver squeeze that Wall Street bets are trying to put on at the moment, I imagine if they can get that to come off, that will be good for Adriatic's the price of Adriatic silver.
Yeah, just to give a quick update, silver accounts for about 35% of all revenue. So obviously, a large increase in the silver price will dramatically increase the value of the project. So if you're interested in the silver squeeze, you should definitely be looking at Adriatic as a prospect.
Nice one, Dan. Well, thank you so much for your time. This wasn't an open committee meeting, so we're not going to make a decision on whether or not this goes into the portfolio, but we will open it up to the community on Facebook and on socials once the episode goes to air.
I think if head to the Facebook discussion group to discuss.
Yeah, absolutely.
Yeah. Sure.
But couldn't be more thankful of you kicking off 2021 with a stock pitch for the Equity Mates community portfolio. If you don't mind sharing some of your notes, we can also share that with the community as well, but we can take that offline. So, massive thanks from us, Dan.
Yeah, and if anyone out there wants to follow in Dan's footsteps and share a stock on their watch list or pitch a stock, hit us up on socials, via email, all the channels.
Or a brand new contact form.
Yeah, true. Or the equitymates.com/contact form.
Well, that brings us to the end of this episode. Just a reminder that Equity Mates doesn't stop here. We also have Comedian v Economist, where comedian Adam and his brother Thomas break down macroeconomics as in an easy to digest way, not say. And we also have the Get Started Investing podcast for those beginner Buffets out there. But as always, thanks for joining us. You can contact us at contact@equitymates.com.
Or the new contact form.
Or the new contact form. Rate and review us if you can. Very much appreciate you doing that. And Ren, as always, it's been fun. We'll chat next week.
Nice one.
Thanks for listening to Equity Mates Investing Podcast, a production of Equity Mates Media. Please remember that everything you hear in Equity Mates Investing Podcast is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The host of Equity Mates Investing Podcast may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.